Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm your host, Tshepo Modiba. Now, we usually engage analysts on the show looking from an outside-in perspective, but today we're privileged to have an insider's perspective on the banking sector in Nigeria. I'm joined by Jibril Aku, the MD of Ecobank Nigeria. Thank you for joining us.
Thank you.
A really exciting time, I guess, to be a banker on the continent. Certainly over the last few years, we've seen phenomenal growth rates, not just in Nigeria specifically, but across West Africa. Actually, you could probably extend that to the continent as a whole. Would you agree with that theme, that it's really exciting to be a banker right now?
Well, I think those boom years have tended to slow down a little bit. Yes, it has been a good run. Yield returns have been good, but lately, as more risk come into the sector,
right,
the regulators have also taken a proactive stance to ask for more capital.
Yes. So
as you build up more capital, of course, the returns have to come down a little bit. So I think it's more like Africa is mainly driven by commodities. There's a little bit of pressure on commodity prices, right, especially oil, and that is leading to some perception of risk around all the sectors being driven by oil economies. Mm-hmm. And so regulators are also being proactive by asking for more capital. So I don't think we will begin to see all those boom years. So this is a conservative time, but it's still a very key sector to drive growth and development.
Just touching on, I guess, implicitly banking as a leverage on economic growth, and given the recent pullback in the oil price, would that mean that you'd have a significant impact in terms of the potential for Ecobank in particular, but also broader banking within the region?
Well, Ecobank, we're on course to meet our numbers. And if you look at the quarterly results that have come out, the Ecobank numbers will hold out. And when you look at some of the other banks too, but in terms of the growth, it's very small. Just because even from a risk perspective, the regulators also are looking at taking away some of our incomes, begin to look at some social effect of banking to encourage more people to do banking, reduction of charges and all of the other things that eroding some of the traditional income lines of banks. And so you won't see those phenomenal growth you've seen in the past, but you will see some decent return that investors will look out to. The good thing about it is that the investors are aware of the factors leading to all of these things, and they look at a bright future.
Now, if we highlight, you touched on slower growth going forward. One of the potentially key drivers for growth is the low banking penetration in Nigeria and the rest of the region. Are some of the regulatory changes likely to increase banking participation? Is that a potential, I guess, a win for the bank going forward?
Yes, and I think the regulators have picked it up. First, from a financial inclusion, looking at reducing the documentation that is required to own a bank account. And so some of those cumbersome paperwork, they've asked that we reduce it so that we can get to their own bank. Alliances with mobile phone companies. They've done very well with registering people into their network. And working with those alliances also, some way we can also reach out to that large pool of potential customers who are not using bank, but are also financially literate. So you see the regulators also permit agent banking. That way, it's another way we can also penetrate to make sure that we get more people into the banking system. So I think, yes, penetration and getting more people into the banking system so that they can begin to develop banking habits and begin to have access to credit to grow their businesses. I think that's something you begin to see. And we've seen that in Nigeria, we've seen that in all the other regions where we operate. We've seen a rise in mobile platforms for banking business, and more alliances being signed. So I think that's the way to go. You will see a gradual slowdown in branch banking,
right?
In favor of those channels as a way to reach out to more people.
People more likely to use the internet or their phones.
Correct. People are likely to go to an ATM to try to use more than cash pool to do some other services with the ATM. People are likely to are more familiar right now with POS. And so you begin to see more banking habits come to the people. So their buying habits begin to change. And then they look at how they can use the banking system more. And I think that's one other way of winning them over. Unlike the traditional selling point where we send a relationship manager to the customer, or the customer walks into a branch. So we now have more outlets how we can reach out to them and get more people into the banking system.
So is it fair to say that technology or IT is particularly, it's become more and more important for banking to become successful?
Yes, extremely important, extremely important. In fact, there is the prediction that there's a book, Banking 3.0, which says that the next level of banking will be technology driven.
Right.
Because when you look at the young demographics who are coming into the earning bracket, most of them don't use banks. They don't come into the banking hall. So the young kids who tomorrow will be the working class of tomorrow, they're already developing their approach to banks right now. They use internet, they use POS, they go to the shopping malls. So they are technology driven in their approach to banking. So as they move up into the working class, so you can see how they will change the way banking is done. And so the banks must be prepared to deal with that changing the way banking business will be conducted. The old traditional customer who likes to come into the bank will be aging away. And so we'll be dealing with a new, more technology-savvy population.
And does that apply equally to both the retail side in terms of the clients and businesses?
It does. It applies to all of them. Today, most of the businesses, let's look at the corporate business.
Yep.
Most of them are looking for a bank that can add value to them. If you bring a product that improves their operational efficiency, they will buy it. So they also are embracing technology as quickly as possible. In fact, some of them are even going on to integrate the banking technology into their own ERP platforms so that you can have a straight-through processing. So everybody wants the easy way to do, the quick, fast, and easy way to do banking business.
Okay, so lots of changes.
You will see lots of changes.
Okay. So from that perspective, I could argue that it's exciting. Maybe not quite the same growth rates as we've seen before, but certainly from an investor perspective, exciting to see the changes happening at the banking sector. Now, one of the focuses certainly in South Africa in terms of banking has been, or banking businesses has been around wealth management and asset management. What does that picture look like in Nigeria?
Well, I think that's a growing segment. That's a growing segment, and if you look at the way the Nigerian banks have recognized that in their segmentation of their client base, they're beginning to recognize wealth management as a key segment that they should focus on, because most of the people need like a financial advisor that will tell you where to invest your money, what area of opportunities are. So going beyond merely banking and saving the money for them. What next do I do with the money? Some of them are interested in properties. They want to make sure that the bank has an alliance with a real estate developer that will bring up some properties into the market. They're looking at the equity market. They want to make sure that there's an alliance with the broking house that can show them equity prices on where to invest. So wealth management is growing, and the banks are, and the customers are appreciating that that is a growth area, and we all have to focus on that. So I agree with you that that's a key focus within the personal banking space, that we all have to focus on the value-added services we bring to the high net worth individuals in our segments.
So whilst it's a fairly small bit of revenue and potential right now, the growth prospects for that are particularly large?
Yes, when you look at the growing middle class, at some point they will come into the wealth management space and be looking for the banker that can be their partner. Remember, they're fully engaged in their day-to-day services. They don't see some of these opportunities because the day-to-day work is crowding them out. So they need a bank that points them to that direction. And that's where the value-added services that you bring on board really counts. And so as the middle class grows, that segment becomes bigger. So we think that there's an opportunity for that. Like you said, it's small right now because the spreads are not very big, but it's a growing segment.
Okay. Now, I typically like seeing the glass as half full rather than half empty. So highlighting some of the areas that we've touched on, potentially, I guess if you're looking in the short to medium term, there's a lot of challenges in terms of regulation or tighter regulation, but there's certainly the core backers for long-term successful growth.
Yes. I think the banking segment will continue to remain a key segment. Okay. In Nigeria, for example, in terms of capital, although we have a fairly developed stock exchange, but the banking business continues to finance most of the areas of growth. So I think long term, I think that's a good bet.
Okay, let's leave it there.
Yeah,
Thank
okay.
you for your time. Thanks to my guest, Jibril Aku, the MD of Ecobank Nigeria. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.